What's up, my friends? Josh here once again. Are your student loan repayments hurting you? After nearly 4 years of no payments and no interest provided by the government, the time has come to pay the piper. It is said that roughly 65% of student loan debt is comprised of consumers ranging in the age between 29 and 49 years old, many of which have already been making payments for 15 to 20 years. 53% of these consumers are millennials who say they haven't bought a home yet due to their student loans being so expensive. In this video, we'll dive into 3 crucial areas we recommend you pay close attention to. First, repayment, then forgiveness, and the last would be how student loans affect your qualification when buying a home. First, let's discuss repayment options. As of September 1st, 2023, just last month, all student loans went into repayment if they were on hold during the approved government forbearance. If your loans aren't in repayment yet, or maybe you just recently graduated and are in your allowed grace period, or looking to further your studies where another forbearance can be obtained, we highly advise now is a time to tackle connecting with your student loan servicer to ensure that your repayment amount is comfortable for you monthly. See, life happens, and now more than ever, those life expenses are higher than normal: gas, groceries, etc. So why not ensure your repayment plan is comfortable now? If you wait, you could end up seeing repayments that are far too high and take time to negotiate a different repayment plan. The last thing you want is for that to happen, and then you are marked late for only being able to make part of that agreed upon repayment. To learn more, click the link below we provided titled Repayment to learn more. Next up, forgiveness. Did you think the government would forgive your student loan debt or a portion of it? From our research, the maximum amount forgiven has been up to $10,000. So far, the U.S. has provided student loan debt relief in the amount of $127 billion, impacting over 3.5 million consumers. And in California, the government debt relief has been $7.5 billion, impacting roughly 127,000 borrowers. Some examples of approved forgiveness have been granted to those working as teachers, government employees, medical professionals, or ones who may be on disability or work in a nonprofit organization. If you would like to learn more about forgiveness options, click the link below to learn more. Last, let's talk buying a home when you have student loans. Despite whether or not your student loans are in deferment or forbearance, a mortgage lender or broker like myself will have to reflect a minimum payment that affects your overall debt to income ratio and max loan approval. The minimum payment required depends on what type of loan you are qualified for. You could be qualified for a government loan like FHA, VA, or a Freddie Mac loan where only 0.5% of your total loan balance is accounted for in payment, or 1% of your total loan balance, which is what Fannie Mae requires. Mind you, you could have a 0 payment reflected on your credit report for these student loans, but we still need to hit for a payment. If a payment is reflected on the credit report and happens to be higher than that of which we calculated, there are ways to help lower, as mentioned. To give you an idea what the calculation looks like from our side, let's take a $50,000 loan balance. At 0.5%, that's $250 per month. And at 1%, that's $500 per month. Or better yet, and another way to look at it, lowering your max approval by $35,000 to $70,000 in purchase price. Learn more about affordability by clicking below on our qualifying What is My Purchase Power link below. In summary, student loan repayments are alive and kicking again. But forgiveness is possible and repayments can be negotiated. Again, to learn more about qualifying to buy a home, feel free to DM us or click on the secure qualifying link below to learn more. Have a great one. Until the next video, this is Josh with the Modshed Lending Group. Take care.